Good morning, traders. Welcome to OptionsTender. I'm doing this really late. I should say early. It's 1 a.m. Eastern Standard Time in the morning. I'm getting done with my day, and I realized that we're going to be up early and on the road all day, so I'm not going to be able to get this weekend analysis video out for you. So this is Bear Market 2025 Part 4. All right. I think if I had to label the title, I'd call it The Turn or something like that. I do believe we have an opportunity to have a high in, and it's very similar to 2000 top here. And so let's see if we get our reversal off of this point going into next week with some follow through. Now, next week we have FOMC on Wednesday, and we also have options expiration. So it should be a pretty volatile, wild ride. And volatility, maybe we do see some ups and downs, but it could mean that we have a pretty large down move if we get follow through next week, and that's what we'll be keeping track of. Our options expected move raised this week into 176 points to the upside or downside, and here they are, the options expected move here now. And our structure still, like I said, positive until we make new lows from the tariff crash. Until then, it's just cautious. We're looking for a lower high. Now, I do believe wave 3 is beginning, and we do have some targets that we'll run through on SPY. We already did it for the members video, $4.99 to become a individual stock member video. We did the analysis on SPX, and I gave the options expected move for our major stocks that we follow and trade as well. So anyway, wave 3. So we had our wave 1 down. We're looking for 2 to end. I believe that has, and we're looking for wave 3 down, the strongest and fastest moving wave in a 5-count impulse sequence. Other than that, then if we have our alternate scenario, which if you looked at Friday's video, then you'll know that the alternate scenario is that we're in a wave 4 into 5, just to top out. And that would be a 2008 type top where we get just a little bit higher. Let's dig in here. Okay, so SPX on the monthly time frame, this is 2000. We made our first initial move down. We retraced 88.7% before continuation to the downside in our bear market. 2008, we had our high here. Made a sharp move to the downside, big wick candle just like we have now, but made a new high, eked out a new high, created a trend line, bear market. After our confluence here of 1929 to 2000 to now, and also with the potential channel here, and by the way, this channel may come into play with this bear market, huge move to the downside. That brings us right into this volume node. Look at all this trade right in the center of this expanding triangle. That brings us down to about 3,000, just a little under. Okay, so right now, and you see that's from 2008, 2022, and to the top that we got here earlier this year. So the tariff crash, right? So we're at that 887 retracement from this move. We're rejecting off of it so far in the monthly time frame, a nice reversal wick. We have plenty of time left in this month. We're halfway through, so we'll see how that ends. Let's go through all the indicators. We have our moving averages. You see those already. We're still in a bullish posture, but we're looking for a reversal. Let's do the DMARC. All right, it's taking its time here. So we have a 6 count coming up so far. Let's see where we go. I want to see this count to the downside start here. So nothing really to look at. We had our bear crossover. Histogram's red here. Just been moving kind of sideways, and we'll show you that on a little bit lower time frame as well. Negative divergence going. Now we have the slow stoke that started to point up. We're over in this overbought territory. We're not there yet, but that may curl down a little bit more, especially if we make a new high here. Then we'll have another divergence in each of these. We don't have a divergence here in the monthly time frame. Still possible. Clone summation. Nope. Let's go. We're not even gonna go to SPY on this one. Let's go to the weekly. We're not going to go over the other indices. Want to get this out. Weekly time frame. Now we might look at the Qs just real quick. I do think it's a pretty sharp chart here. So we have this bearish rising wedge, broke down from it. That was the tariff crash here, and an ABC correction up to the 887. It doesn't appear here, but it is certainly there. For our target so far, not quite up to, we move it up just a little bit, not to the penny, but we're looking at about 4,000 for the wave 3 and SPX. So moving averages still in a bullish posture. We're looking for a good breakdown from this point here, would give us something to work with on the bearish side, but other than that, still in the bullish posture. 8 EMAs pointing up, 20 moving average moving up. DMARC, we have a 7 count. Do we get a 9 count? Do we spend 2 more weeks around this place, or at least above the 4 candles before? Possibly. We'll keep maintaining each week. We'll check that out. OptionsTender setup here. So we had all that negative divergence. All that negative divergence had played out into the crash. Now, are we just getting to the neutral point and get the whipsaw and continue lower? Possibility. On the weekly time frame, this is going to be important. All right, we have a high here on the 5th, it looks like, and then we have a lower high negative divergence right here, right now on the RSI. We're starting to curl over on the slow stoke. We want to see that sell signal past the 80. Okay, let's check out SPY. I think I have, or at least let's check out the target. Yeah, I started working out the target here. So let's get you an accurate number on SPY for this 162% move here. Extension. So let's get rid of all the other ones. Here's our target. High number 613.23. Middle number. We're rejecting off that resistance too. Look at that. Would you look at that? So our high is 605.06. And our low 41.80. Okay, our target is 392.41 to the penny. All right, for wave 3. So you have 1, 2, and a possible wave 3 down, lower. Now these moving averages, I'll put those back up. We should follow these moving averages on the wave 3. It should be the strongest. Follow the 8 and the 20. Should be very similar to this move up, if not even sharper. Moving with the 8. Haven't broken it, got to the 20. 8, 20. All right? So that it should trend fairly similar to that. Let's go to QQQ. And we'll do the VIX. Why not? So we have this bearish rising wedge here. And we also put this trend line from the low of possible wave 2. If you go 1, 2 into 3 into wave 4, you have a good trend line now, because these touches here were valid. So it validates this trend line, and we reversed off of it as well. All right, nice doji candle, possible reversal. I think we're back into that range. We tried to break out of that range, that box, and we're back in it. All right, so rejecting off there. It just the setup looks really, really good. Here's the VIX. So we had this trend line working out here. There's the lows. Wick, body, wick. So far a good low. We had that timing that we talked about. We were just at the end of it. We got the reversal. We're in a rising phase. Let's see what happens next. Oh, let's look at the moving averages. So everything's tightening up. We're back above the 200, pushing off the 8. Let's see what happens here. SPX on the daily. Okay, the daily time frame, bearish rising wedge, secondary wedge. We came back into support, but we broke down again from this technical. It's a technical breakdown. What we're looking for here is, let's give you a scenario here. Let's go to the daily. Let's assume this is bullish. Oh, nice rejection off of that. And I didn't add that in there. This was here. So we have this consolidation area here. We rejected off it. A clear picture of the breakdown. So let's give you the bullish point of view. Now, some say this could be an A into a B. If this is following anything like Tesla, you can get this sharp move and then continuation on. But in the near term, if we want to have this counted as a 1, 2, 3, and then a wave 4, then we're looking for a retracement. If we want to go to direct highs from here and not have a deep retracement, then we're going from the bottom of wave 2 up to the top of potential wave 3, and I think it's a C. And then we'll be looking especially close into this 236 and 382 retracement. And get rid of the other ones. And I want to highlight those a little bit more since we're paying attention to them. Let's make them larger. Okay, so those are our looks there. Now this also could be counted from a bottom here as well. Okay, and so I'm going to leave it at this. As a matter of fact, I have it on SPX the other way, but I'm going to leave it as this because this is, holds our whole gap area here and also this fib consolidation. So if this is a 1, 2 in here, and then you have a 3-wave move, or I should say a 5-wave move. So you have 1, 2, and then 1, 2, 3, 4, 5. That would give us wave 3. We're looking for a correction to wave 4. I'm going to leave this here so we can check back at it. And then you get wave 5 up for all-time highs and possibly to those historic trend lines that we talked about before. So this is a direct scenario where we have a 5-wave move up. It ends this entire bull market and we head lower. Okay. So you can look at this level at 562 being extremely important to 565. All right, that cluster here would be your 38.2% retracement. And if we just hold the gap. Now the reason why this one could be important as well is because this is a possible, so I think this is an ending diagonal where this entire move is done. If this is an extension where you have a leading diagonal, you have to hold these lows here. And that would be where this 23.6. So if we get a nice large move off this 23.6, then this is a 1, 2, 3, 4, 5 higher. So those are the two scenarios for a direct move to the upside. Other than that, we start moving lower, then we start losing bullish probabilities. and we're looking more like maybe a gap close down here for a large A, B, and then C higher for the last wave 5. Okay, that would mean that this entire move was an expanded ending diagonal. Okay, you see the A, B, C for 1, A, B, C for 2, A, B, C for 3, all the way up here, A, B, C for 4, the tariff crash. This is expanding formation. Nice large A, B, and this C should be a nice 5-wave move to the upside. Very, very large move, maybe into 7,000, and on SPY 700 to 800 or so. Okay, so that's our very bullish situation. We have our direct shot to all-time highs, and then boom, or we have our very bullish situation much higher. I hope that helps. Now, as SPX, let's kind of wrap this up here. Our McClellan oscillator into the summation index here. And what we've been talking about is forming this channel. It's very similar to a past channel that we reviewed a couple weeks ago. And we got our bearish divergence here. All right, rejecting. Well, I don't want to say rejecting it. We're right at the channel top. If we reject there, get new lows, we could see this extreme bearish situation, maybe into some new lows here, and then a bounce, and then continuation lower, because we're looking for a 5-wave move. All right, that I love this setup here. This summation index giving us great information. For the moving averages, we got underneath the 8, closed underneath the 8. Let's see what happens next week with the 20. Other than that, our scenario at 23.6 comes right into play with this 200 moving average. So that would be the best bet for bulls. Just hold this and go higher. All right. Other than that, we have the gap all the way down here. The 382 matches exactly where this, the top part of this box here for support. All right. And that's kind of a bull bear situation. If we start breaking down from here, probability is that we're in continuation with the bear market, and then we should be able to play with our backs against it. You get back over this after getting under, get back over, we should probably see a nice move to the upside. So we'll continue to monitor that. Anything else here? We know that there's divergences all over the place, and we got our sell signal on Friday. And I think that we have our cycles we went through already with the members. I think that's it, you guys. We're going to end it here. Appreciate you. Thanks for joining us here at OptionsTender. Have a wonderful day. We'll see you on Monday.